this will be what the world will be using to really power the entire energy transition.
That's often where I see the conversation go, you know, and you brought up a great point. You're like, it doesn't matter how much you find. It's not the point, right? Try to build a mine. That's the hard part.
You're $10 billion short of reality. Congratulations.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, awesome. Okay, guys, Jay Martin here, CEO of Cambridge House, and I'm sitting down today with the CEO of Nova Royalty, Alex Tsukurnik. Alex, how you doing?
Doing great. Thank you for having me.
No, I'm happy to have you. I'm looking forward to diving into this story because we had you, we slotted you into the gold summit last week as like an outlier, right? I had a bunch of gold companies, we had a bunch of gold personalities, but I've been very curious, and my next move is likely going to be into the renewable space, right? And so I slid you into that lineup to test the appetite of my audience. And it was interesting because when you presented, this was November 23rd, a healthy debate fired up in the live chat between, call it like near-term renewable bulls and long-term renewable bulls, but maybe short-term bears, right? And so it was really interesting to dive into that chat and participate and sort of gauge people's sentiment. And so, you know, backstory to this, you know, I've been looking for opportunities in I call it the ingredients for the energy revolution, right? We're talking about copper, nickel mainly. And a mutual friend of ours put me onto Nova. She's a shareholder. I did my quick dive, which always starts with the people. You know, anybody watching this knows I start with the shareholders and the management. Was really impressed by some of the money you've attracted into this deal. People that are very familiar in my channel, like Peter Schiff, Adrian Day, E.B. Tucker, etc. And so I wanted to get to know you now and know more about the company and introduce you to my audience because I think it's definitely worth a look. You've got a very unique angle, and we're going to get into all that stuff. But before we do, why don't you just, for anybody like me not too long ago who's completely unfamiliar with the story, give us the high-level overview, Alex. What is Nova Royalty?
Okay, well, look, it's always a pleasure. We started the company 2 years ago. The founders were Brett, Keith, and myself. Brett, who founded Metalla, who I'm sure the audience knows. And what we saw happening was a fundamental change in how the world is living. So, you know, people talk about sort of the energy transition and electrification and environmental, all those things put together. But fundamentally, what you see is not just an economic trend. It's really a change in values. And, you know, you have a new generation sort of emerging that's for whom, you know, clean energy, clean air, environment, eradication of fossil fuels, climate change, these are all primary lifestyle living issues for them. This isn't just something that's a possible concern. This is a primary concern. And so what we saw was the beginning of those concerns now becoming the mainstream policy of governments and companies and institutions all around the world. And you know, this is the United States, it's China, which is actually the leader of that right now, Europe. And so what we saw, you know, in terms of economic implications was that you had a new energy supply chain forming because you had this transition from fossil fuels to electric energy. And that meant that copper and nickel really were coming to the fore as the new kind of oil and coal of this world. Because for every internal combustion engine car that you don't sell, you sell an electric car. And that car is what? It's copper on the outside and nickel in the battery, and charging stations which are made of copper.
Right.
In a very crude way. At the same time, you know, it's also, you know, when you build wind energy or solar energy installations, you're not burning coal. And so what we saw was an enormous wholesale substitution of fossils by these sort of two electric metals. And, you know, our original name was actually Battery One of the company, because we thought it would be really simple. You know, you're the key ingredient in the batteries, and you might as well be called Battery One. What we didn't realize was that a lot of people associated the so-called battery metals with really small commodities without a proven market, like
Yeah, people probably thought you were a lithium company, a cobalt company.
everything. I mean, it was lithium, graphite, cobalt, vanadium. I mean, you name it, they thought we were it. And you try to tell people, it's like, this is actually a copper nickel story. There's not a whole lot more happening beyond those two. And people were shocked. So after a lot of conversations that, we realized that we're sort of swimming upstream in terms of convincing everyone that copper nickel are the battery metals, we just changed our name to Nova in June of this year. So we've been doing it this way. But if you look at what we've done, and we now I think have a pretty good portfolio to show for our efforts. We've acquired royalties on some of the world's premier copper nickel mines, and that's really these big deposits. This will be what the world will be using to really power the entire energy transition. And the big difference between copper nickel and, say, gold and silver, which everybody knows, and people know the royalty model there, is in gold and silver, you have a lot of deposits. And bringing a gold mine into production is something that's pretty frequently done. They'll go for, say, 10, 20 years and then kind of peter out. Copper mines and nickel mines, especially copper mines, they don't get built very often. And when they do, they often go for over a century.
Right.
And so like the big mining companies that can build them, if it's Antofagasta or First Quantum or Rio Tinto or BHP, they can build maybe one at a time.
Right.
And so what we've done, if you look at our portfolio, we've got three primary assets are the royalties on Taca Taca, which is First Quantum's next priority project in Argentina. Twin Metals, which is Antofagasta's next priority project, and that's in Minnesota. And Nueva Union, which is Tech's next priority project, and that's in Chile.
Okay.
So when they build these mines, they can't really do anything else. And
the
reason
the scale and the capital, and that's a knowledge gap. There's a knowledge gap there that a lot of resource investors or precious metals investors don't see, and I didn't, until relatively recently, to be honest. Just in the difference in scale, time horizon, and capacity of a copper mine versus a gold or silver mine.
Mm-hmm. Exactly. And that's been the biggest, I think, learning for us. And I think what we try to explain, I think, to everyone we deal with, investors and counterparties and everyone else. I mean, this is a very bulky business. And so it creates a phenomenal opportunity, I think, for the first mover. And I think we're pretty early in the game, and we've been able to capture some really great assets.
Yeah. Okay. We're going to jump back to that in a second. And so what this is your angle on the renewable energy revolution, let's call it.
Yep.
You're purchasing third-party royalties on copper and nickel mines, right?
Correct.
Now, I feel inclined to ask, Alex, I feel like retail investors have been sold the renewable energy narrative a few times before, and it hasn't always panned out, right? It's been overhyped, yes. Short-lived, miscommunicated, misunderstood, and people have gotten burned a handful of times. And so what do you have to say? Why is it different this time? And I understand how your approach is different, but what's different about it this time that should give investors confidence it has legs?
Look, I mean, I'll tell you from personal experience how I got here. And I mean, I think that's sort of obviously varies by person. I grew up in the metals and mining industry in the 2000s. And really my first exposure was, I was an M&A banker in the steel space. And so that's kind of, and then from there we transitioned into iron and coal because they're the upstream inputs. So I grew up with this idea that, so China obviously was the biggest user of steel, iron, coal back then. And I sort of thought of them as someone who's sort of more old economy. And then I remember I was at a conference in Lima, a mining conference in Lima, I think it was 2016. 17. And a gentleman from the Chinese government got up on stage and he said, these are the commodities that we wanted back in 2009, 2010. And he sort of rattled off the old list of iron, coal, and stuff like that. And then he says, and this is what we want now. And the list was copper, nickel, lithium. And you look at it and you say, wow. So they're actually making a concerted government-led effort to go green. Mm. And this is something that when you really start paying attention, it's not just the Chinese, it's EU. When you look at the emission standards, when you look at the amount of green financing, which is now mandated at the state and institutional level, when you look at this sort of the overall change in consciousness, the Green New Deal, essentially the EU is the first one that'll probably get to some version of the Green New Deal that was proposed in the States. The Biden administration, in the US seems to be making all the signs and noises about really backing the transition to electric energy. So we're past the stage of, is this going to happen? I think it's a question of how quickly and to what extent. So I think those are the main questions that we're answering at this point, because I think what we have seen is that we're beyond the point of conjecture. It's not as if you need an analyst to come and say, this seems to be happening. I mean, look what the governments are doing. It's you don't need an analyst to tell you that anymore.
Mm-hmm.
So this is getting very substantial, and I think what I see, I always try to see things holistically. It's a consciousness change. I mean, you have people that are kind of, especially the younger ones, for whom nothing else is even possible. This is literally what they see. So the idea of a carbon-free world, the idea of limiting emissions, these are fundamental things for them. So I wasn't a first mover. I wasn't a believer sort of off the bat, not at all. It's just something that kind of came to me.
Okay, now I agree with all that, especially your comments about the sentiment, right? Called the next generation or current, or I think we're pretty aligned on this one. But definitely, the upcoming generation, more conscious about our impact, more aware of the consequences of our actions. I think that's the main difference, right? You have to run a plan before you know what the consequences are. Now we know the consequences, so we're changing our plan. Now, but to your point, you were at this conference and you heard the speaker say, this is what we were looking for. Now we're looking for copper, nickel, lithium. You were going to name the company Battery One. People would have thought you were a lithium company. So if you're supporting this narrative, and I mean, you're jumping onto this trend and giving investors the opportunity to participate, why aren't you focused on lithium, cobalt, any of these more particular rare earths?
So here's how we saw it. In terms of, I mean, there's two things that are important. A, is a commodity going to be in wide use? That's the first question you answer. And the second point is there a supply constraint that makes it important to own specific deposits in that commodity for favorable exposure, right? Because if something is abundant, even though it's used, it doesn't mean that it's valuable, right? So the conclusion we came to with lithium, which I agree, listen, lithium use is going to pick up here quite a bit. The issue is that on the upstream mining side, there's no shortage of lithium. So so unfortunately, there's no real pricing power for the lithium miners. All of the value is held downstream in the processing side of the business. So you mine your hard rock, it gets processed into the actual material that then is used say in the auto space or whatever else it goes, and that's really the best part of the supply chain. So for a royalty company, which is focused really on the critical materials, we didn't see where the actual critical material was on the mining side. To the degree that you have a critical material there, it's probably in some of the processors. Mm-hmm. But that's not really something that we get involved in. We're focused on the critical materials. We want to have the strategic resource deposits, which really drive the entire phenomenon. And in copper and nickel, we saw a totally different phenomenon. Because the value does stay on the upstream side. There is a real supply constraint on both copper and especially class 1 nickel, right? Which is what's used in automotive. So we said we want to create a scalable business, which is really focused on these critical commodities. We want to focus on the deposits that will actually move the needle for the industry in the world, and do it early, obviously, because that's really the only time when you can do it. So. And then we see ourselves as just being a mainstream part of these sectors, and we want to build our business around that. So it's really the only direction I think that we could go to be honest with you, because that's where the value is.
Yeah, no, I that's partly what attracted me to the story. Was I think you've isolated the least volatile ingredients of the renewable energy sector, but when you look at, mine production or, deposit discoveries in the copper sector in the last 30 years, right? Not been much in the last decade, and maybe one in the last 5 to 7 years, right?
There is actually one thing I want to point everyone. People like to talk about copper discoveries. I'll be on the train of saying it doesn't matter.
Okay.
There's been plenty of copper found over the years. The challenge is building them. So the thing is, like finding a copper mine and building a copper mine, it's about a 30-year spread on average in terms of the time frame required.
Right.
So the thing is, there's this sort of gold prism that's applied to copper, and it really misrepresents the business. The complexity is not just on the geological side. Certainly, you need the right geology, you need the grade, you need the size, but the endeavor is a multi-billion-dollar, multi-year endeavor just to build it. And so the scale and the complexity is just much higher than anything on the gold side. So finding it's not that many hands that can do it. When you look at, say, the major copper miners, it's Antofagasta, First Quantum, like I said before, they can build one at a time. And that's
right.
if they're building, because they can be expanding their existing mines. So your bottleneck on the copper side is at least as much on the producer end of the number of hands who have the wherewithal and desire to do it as it is on the project end. And I think that's the part that's not really fully appreciated when people look at the sector.
Interesting. Okay, now I want to talk about some of the royalties that you've put in place, because you guys have been busy. And
we have been.
You've been busy, right? So I think you have 17 royalty agreements in place right now. I want to touch on a few of the highlights. Where do you want to start? And we've got agreements with First Quantum, with Teck. Where do you want to start, Alex?
Well, look, we might as well start with First Quantum. We just got news earlier this week that they came out with a new reserve report for Taca Taca, actually the maiden reserve. So we literally just completed the acquisition on Friday of our royalty interest there. We own a 0.24% NSR, and this is shaping up to be one of the largest copper mines in the world at some point. And it's great. It's great to see that. So the first reserve is just below 8 million tons of contained copper. It's a 32-year life to start. But the thing with these deposits is, this is your starter kit effectively, because they constantly get expanded once they get going. The average, if you look at the top 60 copper mines in the world right now, the average mine life from the time that they started to their projected depletion date is 77 years.
Okay. Yeah.
But they all, most of them started with a mine life that's well south of 77. So what these guys do, you got to start somewhere, and so they put a mine life number on it, and they get it going, and then you just keep expanding. So
right.
So it's really exciting when after you just bought something, you get that kind of news, because it puts obviously kind of public disclosure, and it shows that they have a clear intention to advance the project. So that's exciting, when you have a great company of that nature who is really adding value to what you have, and I think it sort of underwrites what we've been trying to do, because when we bought it, nothing was happening there, technically speaking, and it's great to see that progress. We had actually something similar happen on Nueva Union, which is the royalty we own on the property, which is the JV between Newmont and Teck. We bought a royalty on Nueva Union in February of this year, on the 18th. And it's a 2% NSR and about 20% of the La Fortuna property, which is their large high-grade deposit there. And La Fortuna was only drilled out to about 500 meters, at least from the public technical reports that we were able to get. And then 2 days after we acquired it, Newmont and Teck, it was learned they petitioned the Chilean government for a drilling program of $152 million to drill deeper into La Fortuna. And because this is a deposit that's literally just goes down like a straight pipe.
Right.
And so they, just from magnitude perspective, they had done a lot of drilling there from 2017 to 2019. And from what we saw, they had petitioned for about 34 diamond drilling platforms during that time frame. And the reserve increased a fair bit as well. And then this time they petitioned for 176 drilling platforms. So you've got an increase of 5x over what was already a pretty reasonable drilling program. So when you see a deposit kind of get that much care and attention from such sophisticated, well-capitalized players, this is exactly what you want to go for, because you realize that this will be one of the places that is more likely than not to produce a lot of copper over the years.
Right.
And that's what you see. And then, our third royalty that's being sort of pursued, that's being advanced by a major miner, is the Twin Metals project in Minnesota.
Yep.
And that's owned by Antofagasta. And so this is in a Duluth complex, which currently accounts for about 34% of all U.S. copper reserves and 95% of all nickel reserves in the U.S. So you have two very strategic commodities sitting in one deposit, and then that deposit also has has a fair bit of PGMs as well. So, you don't see a lot of ore bodies like that, and so you've got Antofagasta there, you've got Glencore right nearby with their North Met deposit, a company called Polymet, and then you got Teck there as well, with a deposit called Mesaba. So you've got three big companies sitting in one camp, clearly seeing some similar things, and permitting is a good question. We'll see how quickly that evolves. And without permitting is tough with all these things, to be honest. Nothing's easy these days. But this is where you want to be. You've got all the long-term fundamentals for something that will be a very large, successful camp, and that's what all the value is in these sectors. So we're really excited.
Right, and these are all important names. I think that's another neat differentiator in this industry. When you look at production, you're not talking about hundreds of mines. There's maybe a half dozen players that are going to supply the copper
Exactly
for this transition, right? And half
it's
of the
not a lot of
mentioned.
It's not a lot of people. That's the part that I think people don't fully appreciate, is how few hands are going to be responsible for driving this entire process.
Okay.
Both in terms of companies and the number of mines. So it's this isn't gold where you can have a really good exploration team, you find a deposit 3, 4, 5 years later, you're in production and doing well. Like, that's just not possible.
Right.
We invested into an exploration royalty earlier this year called Janus Lake, and that's a project Rio Tinto is exploring over Saskatchewan. So for the obvious reasons, when you see a major really going after the big district, they built a big camp. I think it's 50-person camp, really kind of making the effort to explore the 50+ kilometer camp, and they've had some pretty good results so far. You think to yourself and say, you know what, it's early days for sure, and let's not get too far ahead of ourselves, but it could be something, because you have the fundamentals there. You have the player, you have the operator, you have the early geology, you have the infrastructure, you have the location, Saskatchewan, which is great for mining in general. So you've ticked a lot of the boxes that potentially could get you that, and it's a rare asset if it's there. So once in a while you'll take those shots to see what happens, for sure.
Okay. So just to recap some of that, what struck me about this story so far is for anybody looking for an entry point into the renewable energy sector. The nice thing about a royalty company is that, generally speaking, you reduce a lot of that downside risk, right?
Yes.
You do have some first mover advantage. You're a new listing, but it's also a new model. There's not a lot, maybe one or two other similar models, but on my radar anyways. And so you're able to strike up some agreements. There aren't many opportunities where agreements are available, right? And you've secured a handful of them already. I am looking at lithium companies, but I do like how you've cut out what I consider to be the most volatile commodities in the renewable energy transition out of your business model. And so I'm not worried about that. I don't have to worry about that. The last thing I want to talk to you about today is your shareholder base. Everybody that watches my stuff knows I focus on people over everything else. And that was the first thing that turned my head about your deal. So some of the names that have financed you so far include Peter Schiff, who's been on the show a handful of times, Adrian Day, who's been on the show, E.B. Tucker, who should come on the show, E.B., if you're watching. And so do you want to touch on that, Alex?
Well, look, we've been very privileged with excellent investor support from day one. We and in large part it's because a lot of the investors that did really well with Brett, Heath, and Metalla, they backed the idea of Nova from the start. So we really had a great long-term group to start with. And so in the beginning, it was Adrian and Casey and Paul Stevens.
Right.
And then And then when we did our second round in February, when we bought the Renewable Union royalty, BD Capital and Peter Schiff came in.
Okay.
And so that expanded the base, I think, of people who really understand what's happening in the sector. And right before we went public, you know, I don't know if you saw, but BD Capital gave us a financing facility of $15 million right before we listed. And that was critical for us because we didn't want to go just raise money to raise money. It would have been dilutive. We didn't really have a chance yet to show what we could do, to announce our acquisitions, to tell the Nova story. It would have been very dilutive for our shareholders. But we had a strategy. We already had a pretty good pipeline, so we were able to sit down with BD and explain what we wanted to do. And they gave us a very, I think, supportive facility for a company at that stage. And so if you saw, we recently did a financing of just over $14 million. And I think we were in much better stead to finance at that point once we had a chance to be in the market, explain people what we wanted to do. The BD facility gave us the backstop to finance those transactions without going to the market if we didn't have to.
Right.
And I think that's really been critical. I think, you know, it's been a real privilege to have investors who really understand the business model and what we're trying to do, kind of back us. And I think, you know, so far it's been, I think, a good outcome for the shareholders, but definitely their support's been critical.
Yeah. Okay. Awesome. Look, Alex, it's been great having you on. I wanted to introduce you and Nova to our audience and learn more myself. Thanks for your time.
It's my pleasure, as always.
Yeah, for answering our questions. And I'd love to have you back on soon.